Now, Ghana's bonds market is set to be back to life again after a turbulent period marked by a painful debt restructuring and investor skepticism. But the big question remains, are the investors ready to lend to Ghana again?
With the domestic debt exchange now behind us and the government making moves to return to the international capital market, we examine whether market confidence is truly bouncing back. Are the new bond offerings attractive enough? And what risks still lingers?
Now, this afternoon on Beyond the Numbers, we break down the numbers, the investor sentiment, and the outlook for Ghana's bond market reboot. Stay with us on the Smart Wall as we break this down, Winston. And we are learning from the IMF document that the big news is that Ghana is expected, you can see that on the Smart Wall, is expected to gradually resume domestic bond issuance this year. Now, the reason why this is a big story is that this is the part of government securities that suffered that magnitude of haircut, that painful debt restructuring that was carried out from 2023, up to, I think, somewhere 2024, that
yes,
it was closed, right? Now, the IMF is expecting that the government should gradually resume debt or, bond issuance again this year. And they've given the timeline, and the timeline is the second quarter of this year. Second quarter of this year, Wednesday, is just about 2 months away, roughly 2 months away, right? And that is what we'll be analyzing on Beyond the Numbers now. We are asking a very simple question that after that painful debt restructuring, have we really built the investor confidence enough? Are investors confident that the market is back? And if governments start issuing new bonds, would they buy them? How should governments sweeten, these new bonds that will be coming in gradually in the second quarter of next year? Now, you take us through what we have to know.
When we talk about investor confidence, consistently, most businesses assess the ease of doing business, the cost of doing business, whether it is easier to ply your business and whether you can sustain profitability over a medium to long term. We've consistently been assessing how some businesses, multinational businesses, have been leaving the shores of Ghana, choosing Cote d'Ivoire, Togo, and Burkina Faso as their optimum investor destination. They have said that if you look at how much it is they lose in terms of payment of taxes, in terms of how much electricity has also become quite expensive, right? Considering the labor costs related to how to operate in Ghana. So these elements were essential to determine whether we are there. Backed with our unfavorable economic condition, debt was heavy, the ratings were quite heavy on us. So we lost so much in terms of the comparative advantage with some South African countries. And we say, looking at how the government deficit has been looking, which has not been quite good. So far, the drawdowns in government deficit at the Bank of Ghana was a key element, painting the picture of where we stand as an economy. And that was quite critical because if you look at access to funds, this became a key conversation.
This was key, right?
Exactly.
I mean, the drawdowns from BOG, which we know currently under the IMF program, there's 0% financing. So if you are looking at these four sources on the Smart Wall, I think that we shouldn't even be talking about the BOG drawdowns because they themselves need, some sort of recapitalization.
And we saw the debt-related activities at the Bank of Ghana. A lot of accusations there, whether they were printing or not printing, is an issue of conversation. But the market reacted differently to that conversation as well. The domestic bond market operations became a key conversation as well. So far, the bond market is not quite active. But this element and announcement that has been made by the IMF gives some kind of positive optimism going into the second quarter of this year. Treasury bill was also a key conversation. So far, government is able to operate in the treasury bill market. If you read the IMF consideration dated December 2024, it tells you that although these were a treasury bill conversation, is now the only element, and multilateral financing are the only two elements where government can fund their operations, infrastructure, education, and all related activities that is critical for national development, these are the only source of financing. And so far, the Treasury bill rate is about 30% in terms of interest, and that is where people are now cashing in.
That's a problem, yeah.
And that is the only access that the financial market can now trade in short-term bills. External sources, which I mentioned, basically the multilateral financing, that is where the government will be getting money. But going into the latter part of this year, there are a lot of avenues that may come up due to the positive sentiment that has come as a result of government's decision to set up a sinking fund, which some have said that it will give Ghana some little bit of positive rating going into the latter part of the year.
In fact, that sinking fund conversation is really important in terms of looking at our ability to pay back our debts, and that definitely influences the kind of ratings you get. Now, we've been speaking to some financial analysts who are saying that, look, the current situation the country has is a bit difficult. Why? Because these were the four sources that government used to get monies from. And if you're watching us, we are breaking down, the second coming of Ghana into the bonds market. This was the surest way. I mean, this was almost about 0% risk. It was actually risk-free in terms of buying government papers or bonds. But we all know what happened during the DDEP, the total number of investors who suffered haircuts. I mean, if you listen to some of the stories, some pensioners and all of that, it was a very dreadful situation for the country at that point in time. But we are getting signals from the IMF program, in fact, in terms of the third review document that was placed or was put out by the IMF, that they're expecting that government should gradually, resume bond issuance. That's what we are analyzing at the moment. Why? Because Winston has actually, gone through this. And the only source of income that the country has at the moment in terms of borrowing or in terms of capital, you mentioned it, T-bills and external. But even external, I mean, now we have to heavily rely on just multilateral, just like you put it. But in terms of getting extra money, maybe whether bilateral arrangement, whether capital, whether, the international bond market or what have you, the IMF has currently placed the cap that you cannot even borrow about $250 million. That means the entire pressure is now on the local investor. And you are the one that we are speaking to, that looking at what has gone on, looking at the current sentiment. Look, the government has announced that they are going to start paying the interest on some of the loans, introducing the sinking fund. Are you really confident that when they start issuing new bonds, you'll be interested? Now, beyond this, right, government has a constraint. And the constraint is this big figure on the smart wall, that government debts, expected debt servicing this year is estimated at $142 billion.
Let me just call it the great inheritance. Because of the new government, and this is something that will certainly be a burden that they have to carry. But how many hands can help them lift this burden is quite critical. We had the finance minister being more confident that he's going to work on raising revenue. The government has given some indication of cutting down expenditure. Cutting down which areas is what we're looking at as of now. We saw some movement from the digital sector, digital communication sector. We saw some movement from the resource sector, where government is looking at helping stabilize the city through the gold board, getting access to mine gold from the local gold miners. And these are some of the actions, but whether they cumulatively help stabilize the city is what we're looking at. Because investors want to see whether the economy is strong enough to help stabilize the city. You buy a goods today, the next week, because of the city's instability, you tend to spend more. You go to the port, the taxes there, day by day, demurrage consistently keep increasing because of its gauged on the city. So the city's position, the city's health is very critical going into this year.
Now, I mean, this figure is big, but I mean, our focus is whether investors are really willing and ready to start lending to government again. And if there is any metric that we can actually reference, it should be the issuance in the T-bill space, where almost all the T-bills that government have come out to buy have been oversubscribed. That tells you that there are local investors and even external investors who come into the local space to come and invest. They are looking for alternatives to buy government papers because everybody knows that because of the high risk attached to government, you definitely will enjoy a higher coupon rate if you buy T-bill or whether you buy government bonds. So definitely, I mean, nobody sacked government out of its own bond market. It priced its own self out. So if it's coming back, it will definitely come back with a very lucrative, juicy interest rate. And as we are seeing in the T-bill market where we've had a number of oversubscriptions, this Friday there will be another issuance. It will be interesting to see the magnitude of the oversubscription, and we'll try and see that looking at the Bank of Ghana's summary data and looking at the investor confidence going up, is this a positive signal that when government starts issuing new bonds, people will buy? But talking about this big figure, if you break it down, the reason why domestic creditors have become a bit critical is that this 142 billion Ghana cedis that we are talking about, you break it down, you see that majority of that is expected to be paid to domestic creditors.
Absolutely.
100, almost 17 billion Ghana cedis as against just 25.4 billion cedis in the external space. This was a problem, but we've been able to get the moratorium on the bilateral side, giving some crazy haircuts to the commercial guy. So yeah, we are free here, but this is the space that we tackled first when we're doing the debt restructuring, and most of the amortizations are coming up, interest payment coming up. So investors definitely will be looking at this big figure and say, whoa, how is government going to find money to pay this? Then they'll know that if government is looking for such a huge money, they'll come to us to borrow, right? They'll come to us to borrow. So we are ready. Maybe they may be saying that they are ready because they know that once government is looking for such a big money, it will come with a very lucrative interest with it.
When people look at the geopolitical aspect of how businesses are done, especially the leadership of the country, recently we saw the President, John Dramani Mahama at Munich, making a statement expressing how the U.S. decision to cut aid in terms of the U.S. aid and where Africa should be looking for it in terms of leadership is to look within, add value to resource. And all this is going on. Just yesterday I heard the news.
I love this geopolitical element.
Exactly. Yeah. Where the news that one of the African countries have started refining their own crude oil.
Oh.
Ghana, we've been in this space for several years. We keep going 2 steps forward, 3 steps back. And why we haven't gotten there is what the president was telling the global community, that it's now time to put forward what we must do domestically. And we're talking about domestic investors. They are a key element. We know how much these people play critical role in holding the economy. If their monies are not there, their weekly, monthly T-bill payments or debt monies being lent to the government, if government does not have that space, that capital to ensure critical projects like healthcare, school, you've seen all the promises that they gave overly promises, how many years gap? Because when you begin some project, it takes about 3 or 4 years for them to be executed completely. And whether those projects are sustainable is something that we'll also have to talk about. But financing will still be a key issue. Very key. Now debt is all over the nation, but where can government find the breathing space? And that is what we're going to be looking forward to, understanding how much of these full amounts will be breaking down within the year. Some even think, like our theory have overly been changed. We always knew that there is no way government will not pay back its bonds. You recall those things?
I recall. I mean, even Dr. Edward Anuenchi was a lecturer. I mean, he was teaching people that buy government bonds, buy government securities. And unfortunately, he suffered a haircut. It took him some, activism and all of that to actually get his money. And that when government announced that they were going to make the 4th tranche payments, he was really happy. That tells you the ordeal he is actually going through. And a number of people, I got
messages just after the issuance report just a few days ago by the Communication Ministry of the Presidency. Many people were asking me, so what does this mean? Is it that the haircut is not good? I said, no.
The haircut has already
been happening. So it is just government fulfilling its
part of the bargain, right?
Exactly, its bargain. Whatever it's agreed with the bondholders. Government is fulfilling its angle of promise, because government is government. It's just the power that changes hands. So the government has to fulfill the conditions that it has signed with you, the creditor, and therefore it has to meet that stipulation. So this 117 billion actually is one key issue that we'll be handling in our local economy this year.
So investors watching us, this is a big number on the screen. 117 billion Ghana cedis is what government will be looking for. This is just a projection. And because there are external elements in there, in fact, that tells you that the total debt servicing, if the cedi begins to misbehave, can actually go up. But looking at the projection for the local space, it means that local investors will be important. So if you're watching us and you are considering where you would want to, if you were one of those who decided to buy T-bills and could not get it, in the insurance company, the banks and all of that.
All of them.
I mean, know that government will be relying on you heavily this fiscal year, because, I mean, their ability to get more money from the domestic space will determine how they honor their obligations in terms of debt servicing. The figure is big, but Winston, there's one thing that comes up whenever, I mean, government decides to pay coupons. Is the link to the fact that you may have investors who will accept the coupons from government, and they are trying to find ways and means to recover the haircuts they lost. So what they'll do is that they get their coupons from government and they go and buy dollars. That puts a lot of pressure on the cedis. But we understand when we spoke to the Bank of Ghana, remember the gold coin, right? He said that we are aware. That is why we are making available the gold coin.
It's a more stable investment
so
portfolio.
that maybe if you receive your payment from government and you are still looking for another place to invest, you will not just be looking at the dollar, but rather buy BOG gold coin. That will also be an interesting conversation, especially looking at how this current 6 billion that will be injected into the economy can affect inflation, or how it will affect the exchange rate situation, because we do not want a situation where this big 6 billion being injected into the economy by government will go and chase the less dollars that we have in the system, Winston.
For the dollar state right now is quite stronger because of the U.S. government, where it is started to position the currency, because now it's hidden tariffs from any country that fails to meet trade conditions that it has with. Canada is one victim, China is another victim. Mexico just received its own 2 weeks ago. So where the currency the dollar is standing now, it has positive optimism. It is looking stronger. So if one is to hold on to the dollar for some time, it will give it some positive sentiment. But with now looking at how the city has performed in the last 3 weeks, tells you that indeed there's a shift in confidence to the positive side considerably, because if you look at last year, the rate at which it was falling was quite disturbing. Many were even sure that in the first quarter of 2025 there will be a bit of stability.
This has actually been the best performance in a long time in terms of first quarter performance. I think so. In terms of the dollar against the cedi.
That's quite true. The changing the governor also brought a bit of positive optimism as well, because people were looking at, he's the new governor, what kind of strategy is he going to look at? Is he going to look at the monetary, the fiscal angle? How is he going to manage the financial space? All these are people observing, because they know his track record, but asking what he will be doing next is what people are looking at. And what the next MPC meeting is something that everyone is looking forward to, including the finance minister's plan on the 11th of March, especially as to how much
the budgets, right?
Exactly. Which areas are they going to be focusing this year?
So in fact, there are 3 things that we should be expecting. First one is the president's State of the Nation address, right? He is going to open what he has inherited, and he will tell us the true state of the nation. That's the first thing that investors will be looking out for. The second one will possibly be either the budget or the MPC, right? So 3 things will determine the next decision of investors. And this is very interesting. And I love this new policy that the acting Bank of Ghana governor, Dr. Johnson Isiama, wants to introduce. He said that if you come to the MPC meeting, it is so difficult to know what person A said, person B said, person D said, right? So what he wants to do is that he is proposing that you publish what everybody actually said during the MPC that led to that collective decision that they took. And I'm saying that, I mean,
that would be interesting.
That would be very interesting because you have that open space in the US where they actually, draw dots and all of that, and that informs the decision. But in our case, there is some sort of some closure. I mean, they always go into
keep you in this anonymous kind of conversation.
And then we just see the big number and the decision that comes out. But this new governor says that if he gets a chance, I mean, he would want to publish whatever, person A, person B, whoever is on the board, the MPC, actually said. That will also be very interesting. One thing that I think that the Bank of Ghana isn't really good at doing is giving forward guidance to investors.
That's
right. In the US, when the Fed chairman comes to present the MPC, there's some sort of forward guidance to guide the activities that are going on in the stock market and every place. But in our case, we definitely will put out everything and leave almost everything to investors to do the projection our own self. We don't see any form of forward guidance. Is it just because our economy isn't really dependent on what we determine in the domestic space, but rather because of the external factors, we are unable to bring on board forward guidance, Winston?
We have a small financial market growing. If you look at the US, their financial market has grown through the zero, breakdown, depression, Great Depression here and there, and they have withstood the test of time. So they've built buffer structures. So they're able to turn on the knob when the dollar is not doing well. They're able to turn off the knob which sectors are pushing the economy. They know which angle or how the market will react to a task cut in a particular sector. So they can say today that the oils, basically let's say aluminium, export to China, export to some country that are into manufacturing. If they cut down supply, it will bring out certain elements in that country. So they know how to play the economic dynamics.
Really key,
they've mastered it, and that is what China replicated and is working with as well. So they are able to take up the pressure. So it is quite critical that Ghana start thinking from that angle.
It's possible because
if US coughs, imagine what happened COVID time. We all keep saying because of the COVID-19 pandemic, we are, as a nation, this is why we are where we are, because we could not prepare ourselves enough. Ghana has always been Ghana. We've always had our resources. We've always been where we were before. The COVID came. We've been investing every year. Budgets are being presented. The healthcare facilities, monies are being spent on healthcare. If you go to hospitals and all facilities, you keep realizing the same resources the same hospital where I was born at. If I go there, I still see the same structures there. I keep wondering, what kind of sustainable, what is our structure long term? Enough of the theory, let's get down and get the work done.
But I mean, we are, definitely US is good, but they are not good at almost everything. They are not a jack of all trade. There's one thing that I think that in the geopolitical game we can take advantage of and plan our economy around it, and that's the cocoa sector. Where Ghana and Ivory Coast combined produce about 60% of the world cocoa beans. But yet, we are not able to make any significant contribution on what goes on. It should be that when we cough, the world should also catch a cold in terms of cocoa pricing, right?
Previously, Nigeria was the second largest supplier of cocoa. We are doing the mistake Nigeria failed to rectify. And we are getting to a place where we are losing access or control over the market. Imagine Cote d'Ivoire decides to dominate the market and we are not near the production output of what Cote d'Ivoire produces by about 3 times. That means we don't make any sound. We don't contribute to the price determination, irrespective of the agreement we have with Cote d'Ivoire in terms of having a fair prices. So this is the challenge now. So with this debt there,
exactly. I mean, this figure for me is important. You put this together.
The
cumulative debt servicing obligation for the Mahama administration stands at.
Give me the next one. Let me show you something. This is the big number, 709. 2025, what we should be looking forward to, viewers, is 142 billion in terms of debt servicing. 2026 next year, 165 billion in terms of debt servicing. That is the burdens keep accumulating.
Yeah.
In 2027, 186 billion, whilst in 2028, 216 billion is what we will be
That
heading
gives
towards.
you this big number on the screen, right?
709. So
709 billion.
Exactly.
Wow.
Each government will have to find a strategy to inculcate how they will be able to manage it. This as against every structural promises on development as a nation.
You painted a picture about the aggregate, but what we decided to do is that ability to pay is important.
Yes.
Investors watching us will be looking at the ability to pay.
So the blue one is the revenue, whilst the
Expected
black
revenue,
one is total servicing. While the red line tells you about the domestic debt servicing. So the blue line, we realize how much revenue we'll be having in 2025. Projection is 209 billion. And if you look at how much in terms of debt servicing domestically is 142. If you look at the total servicing itself, we have 117. So it tells you that we have high projection in terms of revenue, but still the servicing will take half of it compared to how much fiscal space will be available to engage in some terms of payment. So 2025, 2026, 2027, still we have huge revenue projections, but whether we'll be able to meet our revenue target is a key issue for concern.
So I think that in terms of dot plotting, the biggest test for the Mahama administration will be 2025, and that's the reason. Just check the three, boxes. Blue is your revenue. This is your debt servicing obligation total. This is your domestic debt servicing obligation. Just look at how close they are in 2025. That means that this year is like the make or break moment for Mahama, because once you are able to cross the 2025 hurdle, what you begin to realize is that government begins to get some breathing space in 2026, where the gap begins to widen. See, your revenue projection begins to be more than your debt servicing.
It gets better in 2027, so that is where we can have some free space there.
This is interesting, especially for 2025, Winston.
So it gets interesting as we go ahead, breaking down the numbers, bringing you up-to-date conversation as to what to expect in 2025 from the government, touching various angles on beyond the numbers. And we'll make sure that from Wednesday, 2 p.m., Friday, 5:30 p.m., we'll bring you comprehensive analysis of key issues on Ghana. Kofi.
Thank you very much. My name is Isaac Kofi, and I always do this with the mastermind here.
Winston Taki will come your way same time, Friday at 5:30 p.m.
Friday, 5:30.
Thanks for watching. Have a wonderful day. Bye-bye.